My name is Sushil Raja. I run Link, which is a part of the Onyx group in JP Morgan. We're essentially the blockchain division of the JPM payments team, and we're re-architecting and rebuilding financial infrastructure. So Link is an information exchange platform, and so I think a lot about how networks can potentially address issues like fraud through collaboration and information sharing.
Hey, Robert Rendell with Nice Actimize, Global Director of Product Marketing. Also, 13 years as a fraud practitioner. So in my role now is how do we take our solutions and put them to the market to address client needs and understand their use cases most effectively and efficiently so that they get the ROI.
Hey everyone, Jeff Dant at Ally Bank. I'm the head of fraud for our deposits and invest group. And just some background on me, been in the fraud roles for a while, but half of my career was law enforcement with the U.S. Secret Service, so seeing the other side of the fraud world and getting to work with the MOPs head on.
Why don't we, Jeff, just pick back up with you and we'll kind of work our way back across. So what are you seeing around right now around Mules, emerging trends? Like, what do you want to share with the group around what you're seeing?
Well, I think it's a good piggyback from the session we just saw, because we talk about bots and we talk about how bots impact the fraud landscape. But one thing that kind of has come to surface is that all bots that are doing the nefarious activities for account origination and opening aren't just there to commit fraud. What we're finding is a lot of those are actually mule-based bots. They are building up huge networks across many FIs for the purpose of very efficiently moving money around, whether it's coming from government stimulus programs, unemployment benefits, any of the products that move money. It's a big component of it. So it's a very timely conversation to talk about the synergies between fraud and AML, because a lot of this is the burden on the fraud back for technology, operations, and management. But what we are doing is really collaborating to stop money laundering facilitation.
Rob, what would you add from really kind of the supplier side of all this?
Yeah, I think what we're seeing, right? You can't say account takeover without saying a money mule, and you can't say scam without saying a money mule in certain aspects. I think what we're seeing is, just to Jeff's point, is the sheer size and scale about it, right? And organizations are having to really look at it from a technology perspective and bring multiple points of data together to tell that story of the mule activity. And especially as we have faster payments and new payment rails coming online this year, and as soon as the money it goes out of an account takeover account, it goes into a mule account, and the mule account is trying to get it out as fast as possible.
So, you can't think size and scale without thinking about Chase. So what would you add?
Yeah, I think what really resonates and what we think a lot about in JPM Payments is just how quickly payment systems are innovating. And there's an up and down to that. There's a pro and a con. The pro, obviously, is payments become more efficient. The con is, in the case of fraudulent transactions, it's harder to get the money back. It moves too quickly. And so it just increases the importance of identification and addressing these issues early on to prevent it, because once it's out the door, it's gone.
Well, that's actually a great segue. And Rob, I'd like to start with you in terms of talking about tools and capabilities in the fraud and AML space that either your organization has, or maybe you're competing against, you're just aware of, that are helping to deal with this issue.
Yeah, so from a fraud monitoring and an AML perspective, it's really about those teams and singular tools coming together that can quickly ingest the data from ancillary sources and very quickly in real time spin up alerts associated to the activity. And I also think we have to look at it from different scores or different viewpoints. When we're looking from a pure modeling perspective, it's no longer just one model looking at ACH or wire. It's the models looking at it more holistically and bringing in the non-monetary data, the digital data, telco data, looking at it from multiple vantage points to tell that story.
Jeff, as a practitioner, what are you seeing out there? What are you kind of keen on right now? What's working for you?
Well, it's interesting because I'm not a technologist, but what we've been doing is really exploring not just the fraud technology that we have and what's available, but just technology, period. So what we've been able to do is partner with a lot of our teams and start to really do inventories and architecture of what we have and where can we put that. So if you look at kind of the gate reference that was said earlier, the Swiss cheese, however you want to say it, your technology stack, layered defense, kill chain models, all of those things, and kind of running your scenarios through it, you might find that there's technology that you don't own or know about that can do something for you. So kind of having the collaboration between the teams to really run through those exercises, that if we're going to see a certain use case, let's just say it's bot attacks for the purposes of account opening, at what layers can we knock the majority off? So we can knock it off at the firewall level, some of the industry standards out there. And then the next layer is, a little bit deeper in there. Always ask, what if? So what if they pass this? Well, we might have this. What if we have, what if they pass this? Then it starts to also get outside of the technology, and you need to form your operations and your analytics teams and your data scientists around all of that to pick up the slack. Technology can't do all of it, so you need to have practitioners that know what they're looking for and can kind of go in there and fine-tune it a little bit. Let technology take the majority off of it from a preventative standpoint, and then send the teams in there and hunt for the bad guys that slip through.
I threatened these guys that I was just going to make up questions and deviate from what we had talked about, and now I'm actually going to do it because Cecile, I'm actually kind of curious now, playing off of what Jeff said. As you think about Onyx, are you guys any thoughts in this space on kind of leveraging blockchain into the defensive mode as opposed to kind of an offensive process mode?
Yeah, absolutely. So Link, which is a product we've launched over the last couple of years, is focused on information exchange, and I think it ties in nicely with that theme. Across the globe, you see regulators starting to step in as well. All with the common theme of how can institutions share information with each other to address this at the root. So you got Cosmic in Singapore, you've got Confirmation and Payee in the UK, the EBA is starting to play in that game. In the US, you've got the NACHA web debit rule. Across the board, it's all about how can you validate payments, how can you get ahead of fraudulent attempts and increase payment efficiencies. So our thinking is how can we enhance and accelerate some of these mechanisms? And it comes down, even if you think about JP Morgan Chase. So you've got JP Morgan on the corporate side, you've got Chase on the retail side. There's, how many people here are part of big organizations? A few hands in the room, right? Like more than 1,000 people, you quickly see silos being created. There's a lot of power just within one organization on information sharing. And at JPM Chase, we've seen that in action between the corporate wholesale side sharing information with the retail side and vice versa. And so if you zoom out at an industry level, we think there's a lot of opportunity to bring institutions together to facilitate that. And we're sort of, in some sense, also seeing that happen organically with regulatory regimes starting to focus and push some of those efforts out as well.
I think that brings up a good point, right? And we talk about information sharing. I think we have to look at it back from the aspect of information sharing within the four walls, right? Making sure that there's good business change controls and committees that are understanding of all the initiatives, because actually from my standpoint and working on the technology standpoint, is more times than not, right hand and left hand within an organization don't know what's going on, and they actually learn based on a vendor visit, right? And they're like, oh, we didn't know that project was happening. It could actually benefit us. So having good processes in place related to change control is really good.
I want to go a little bit deeper in collaboration for a minute, but Ian said this morning in the first session, he's like, we are not going to discuss liability. Well, we're going to talk about liability. Because I'm a believer that economics matter. And I'm curious, Rob and Jeff, what you see kind of from the supplier side, how the economics of liability factor in this space of identifying, preventing, remediating mules, and then Jeff, kind of maybe some real life experience or tips for the audience on using the economics of fraud to generate the investments and actions that you need. So, Rob, you want to kick us off?
Yeah, I think what Mary Ann just said a few minutes ago about thousands of accounts getting opened, and then the thought of actual funds going into it, and then you consider this idea of split liability. From that standpoint, it's gonna be messy, right? And you gotta lock down those accounts, you gotta remediate them, try to figure out how to get the money back. So you're gonna have actually a victim claim. Now you're gonna have a claim on the scam side or the Mule account as well, and it's just gonna be, in my opinion, without leveraging technology correctly, it's gonna be an operational nightmare on, one, identifying all the accounts, two, locking them down. If they did receive funds, getting the funds back to the originating bank where the victim lies, and then you have the closure process as well.
Exactly, and I think from the Mule standpoint, the liability that comes with those, it is a true operational burden, and it's not just from the industry and where liability sits for potential monetary exposure and losses, but also what do we do with those customers internally? Because everyone who receives funds illegitimately is not necessarily a criminal. They're not always a witting mule. We have scam victims. We have people that are just out there willy-nilly in the banking system that we can't always just debank. So it's it's also a multifaceted challenge of what to do with your risk posture and what you want to do with these. You want to bank certain people, but you have to look, are they a liability? If I just send them out to the wild, am I doing good by them and not offering them a place to bank safely? And it's very challenging. And when we get into that investigative component of it, that's when the manual operation really kicks in. Mm-hmm. Machine learning is not there. These are going to be human-based interactions with the customers to say, what did you click on? Who called you? What did they say? Did you know that you were receiving this money? Do you know who you were sending it for? And really trying to tie the human component to it to understand, was this person probably facilitating this knowingly, and then we want to take actions appropriately. And then we also have the ability, just like we were mentioning at the back half of the last one, for misreporting into the regulatory space. We don't want to be filing SARs on unwitting victims of scams. That's just bad for the ecosystem. It clogs up the pipelines for SARs. Law enforcement has tons of bad data that they don't know what to work with. They're going to have to come back to us as a process to understand what happened in our case. So it's a challenge because it messes up the entire environment.
So let's move on to collaboration for a second, although I have 14,000 follow-up questions for you, Jeff. We'll come back to. And still starting with you, right? I know you're very passionate about collaboration across the organization. We talked about AML, fraud, cyber came up in the last session, and as well as across the industry. So would you share with the audience kind of your thoughts on the power of collaboration? How do you get it started, et cetera?
Yeah, I think my view is we're kind of moving into this age of what I've started to call collective intelligence, and you're seeing it manifest in a few different areas. One is with LLMs and AI. What those represent is essentially models trained on our collective intelligence, collective information that is out there on the internet or in different data sources. Similarly, organizations exist, data lakes exist in organizations in silos. That data is incredibly valuable, not just to that organization, but to the broader industry. The question is, how do you actually take that and share it in a secure way? Obviously, along with the proliferation of data over the last few decades, there's been a lot of focus and attention to security and privacy and ownership of that data. And so I think tying to the question that maybe I didn't answer directly earlier about blockchain specifically, that's why we're pretty excited about the role that blockchain can play, because that's where the decentralization comes in. If you can create a network where there is no central party that is privy to the data, where it's exchanged specifically between two participants on a permission basis, you can create the same effects within an industry where competitors might have been hesitant to share that information, but now they can step in, share it in a secure way, and potentially drive new kinds of revenue streams in the process. And so I think there's an opportunity, especially when you think about something like fraud, where it's a win-win for every institution that participates. There's an opportunity to create a new form of collective intelligence in the financial services industry.
Great. Hey, Jeff, anything you'd add around the power of collaboration, getting collaboration going within Ally and across?
Yeah, I think just in the industry and the banking sector, what you find is some uniqueness in the fraud and the AML programs because we all have our mission and our goals, and they're kind of unique. I think the big part of collaboration is understanding what that common mission is. So when we sit here wrapped up in the MasterCard logos here, that's one thing that kind of makes sense, that Venn diagram. If you look at AML on one side, fraud on the other, in the middle is what we need to collaborate on. Some things just let them be different. But those areas in the middle are what's important because when it comes all down to it, we're looking at the same thing. We're looking at the same customers. We're looking at the same transactions. We're just looking at them through different lenses for different purposes. And understanding where we can do that more efficiently together to help each other out is a good starting point. And that's just the basic concepts of collaboration, getting the silos broken down, getting rid of some egos that exist in all of these groups, and then start to layer on the technology, the data, figuring out how to integrate it and use it. Is it collective data that could be used for scoring models, for behavior, for queuing those up for reviews on the AML side or the fraud side? There's so much what we can do, but the big part is kind of knocking down the silos, getting people talking, and and starting that way. But I will say, it's much harder to do in practice, and what I found is the larger the organization, the more challenging. Because if you look at, like a JP Morgan, a Citi, Bank of America, these are huge organizations. So your fraud management practice is a huge undertaking. Your AML practice is a huge undertaking. So to find that time to really collaborate is the challenge. You really need to, top of house, knowingly put those heads together.
Hey, Rob, a little bit of a different spin on the same question for you, since you have an opportunity to really kind of look across. What do you see that seems to work well, kind of to play off Jeff's point? In a follow-up question, do you see a role as kind of a very major supplier in this space of helping to accelerate that or even initiate it within an organization or across organizations?
Well, one thing. I think cloud is going to help facilitate this, right? And it's going to allow adoption of new technologies, new processes, and bring things together easier than historically with on-prem solutions. But the collaboration it's the collaboration of the data to be able to look at it differently and create alerts and get it over to operations more effectively, efficiently is where things need to go. And I go back to the collaboration of just within the four walls, right? Making sure the fraud teams are evangelizing their programs. How is facilitating a business to move forward, continuously.
Sorry, I did have one other afterthought kind of on the collaboration component of it, and it's it kind of goes behind the business goals. So obviously, AML and fraud have business goals that they need to achieve, regulations to appease, but another area of that collaboration is the common mission that isn't always the business goal. And one thing that kind of happened at Ally, which was good to see where we could start to have a lot of impact together, was just in a normal conversation with our AML team, talking about just normal funny business. And we just happened to bring up, Ian Mitchell and the Noble. And of course, I've known Ian for a while, and our AML officer was like, oh, I know Ian very well. We're doing some stuff with the Noble. So getting behind the scenes of what really happens behind the Mule networks and the fraud and the money laundering, that it's not just the business decisions and the business goals, that there's a dark world out there behind the scenes that can be collectively mitigated to have some significant real-world impact. Stop the proliferation of the crimes against humans. And when you can bring teams together for that common purpose, you do start to see some other collaboration.
That's a great point, right? That shared enemy, that shared objective. So I think, Cecile, starting with you, we've talked about collaboration, we've talked about some of the processes, and we've talked now, and Jeff really hit, I think, squarely on how to drive that with AML and fraud, hit on AML or fraud and cyber earlier. If I think about the tools and using an AML tool in fraud or vice versa, or tools even not imagined or associated, what are you seeing that might be working? What are you seeing that you think the industry needs to do?
Yeah, so today I think there's a lot that's working, that's already in flight in terms of, I would describe it as like the best of the collaboration that's possible today. But I'm also excited about what collaboration could look like in the future. The other sort of exciting space, especially from a modeling perspective, is federated learning. So the notion that you can have a common machine learning model trained on separate data sets. If you think about the big banks in the US, we're all independently using data sets to train our fraud models, and maybe there's some overlap amongst common data sets. But the thing that, again, prevents us from really creating one supermodel is the information sharing element. And so as we sort of develop more and more of these sort of technologies to build stronger models, I think there's an opportunity to potentially do federated machine learning to address fraud, train models independently in different data lakes in different organizations without sharing the underlying information, share the parameters with the central model, and then share the sort of the final model back to all the organizations, and you can end up, and we've tested this, but you can end up really increasing the efficacy of those models.
Rob?
I think we all want to share information. I think we have to figure out, and Ian said it earlier this morning, right, being able to share it at scale. So I think we have to look at all the work that was done under the provisions of 314B and Graham-Leach-Bailey, and come together, and obviously there's a whole bunch of work being done on terminology, but what gets loaded to a negative list, and is Jeff's definition of fraud the same as bank down the street, and having that common alignment to it's a give to get, right, to be able to substantiate a consortium, but we have to get on the same page with terminologies and typologies, and then be able to take the provisions of what was done under 314B and Graham-Leach-Bailey and really scale it out.
Jeff, anything you'd add?
No, I mean, I'm aligned with all of that. I think, when it comes down to operationalizing it, those are some of the challenges there too. Trusting the data enough to really set it to do the work that you want it to do, especially if you're talking about, any sort of friction, if it's going to be a deny list, if it's going to be something that restricts an account until you have someone take a look at it. Those are where you're bumping up against, hard against the regulatory space, model risk management, really feeding into that. So those are the challenges of bringing it to life, but, I think it's a huge benefit.
So, and I'll just give you the scorecard so far. About 32% of my questions have been off script so far, so I'm going to try and level that out and ask you another one. Rob or any of you guys, when I think about Mules and I think about AML, right? AML traditionally has been more focused on the receive side compared to fraud. Mm-hmm. Are you seeing more institutions start to level the tool set on the send and receive side?
I think if I go back in early in my career, I said I wasn't going to touch AML with a 10-foot pole because it's so gray and so regulated. But you are starting to see your systems, your processes, your teams starting to come together, and you're having this convergence with fraud and AML because ultimately, to Jeff's point, right? In certain instances, both teams are touching the same customer, so there's huge inefficiencies. And then, from a customer perspective, they don't understand what's going on. So you have to have this convergence in order to correctly look at fraud risk management or fin crime in general more efficiently.
We've had some questions come in, guys. So one that seems to be popular is, what data points do you find most valuable to define or determine intent to better size attacks and lead to earlier detection of mules? Anybody have any thoughts on that?
I can kick it off with tenure. Usually, if they're coming in the door and breaking bad on you in your first 30, 60 days, intent was pretty clearly there.
I would also argue channel in which the account was opened. So if it was opened online, there's ambiguity of who actually opened it because they were hiding behind a screen.
I actually think this next one's very well tuned to what can be done as an industry, at the industry level, to better track the movement of money across multiple FIs. Seems to me that you might have a solution for that.
Yeah, so I think we're starting to see, we're also seeing this in the fintech marketplace. Like there are increasingly solutions that, again, it kind of ties back to as payment rails become more efficient, you want to be faster at tracking down where the money is and get to it more quickly. And so there are certainly solutions we've seen in the EU in particular that are starting to emerge, and some good examples out of Estonia as one specific spot where basically banks will come together and identify in real time, in a more real-time fashion, when these sort of fraudulent transactions have taken place, and essentially put a stop to it. And I think it boggles my mind, but oftentimes the roadblock to doing that is the fact that you're picking up the phone and calling someone, or you're sending Excels back and forth and there's a turnaround time, or you're working from different time zones. Especially on the wholesale side, I think we see that quite a lot. And so to the degree you can really make the information move a little bit more quickly, it could help.
Yeah, and I think, touching on that one, I think your network is important, establishing a trusted network so you're able to reach out quickly to that first FI, and then having that true trust where you can get some tidbits if it's gone. That we don't like to hear there's no money in the account, or send us a hold harmless letter and we'll let you know in 3 to 6 weeks. You want to have those trusted relationships that they will tell you it's gone, but here's where it went. Call Jim. So those are what we really want to build out. And I can't see. It's like I'm staring at a tractor trailer with high beams. Is Ian Mitchell in the room? Do I have permission to kind of pitch a little Omega stuff? All right. So it's actually a problem that we've been trying to solve, and we think collectively, bank to bank, there's abilities to do that, but it also could be facilitated. So I've been working with Ian on an idea of how we can leverage his company, Mission Omega, to kind of facilitate a network of banks and a trusted network, tied in through legal channels at the banks to do just that. Let's set up a network, a trusted network, with a facilitator in here, and let's find that money. We are finding that if we go after funds on day 0, day 1 of them leaving the bank, our recovery rate is significantly higher than if we let them age a little bit. Even second, third hops, we're still getting money back domestically. The challenge is going to be when they package it all up and they try to roll it out, either internationally or bury it into, some of these companies. But I think there is a great program here that we can establish.
I would also argue making sure you form those relationships with law enforcement. I was out in San Francisco a couple weeks ago, and Secret Service, FBI were talking, and the banks that form great relationships with law enforcement are seeing high success in those recoveries and taking down those fraud rings.
Yep.
It's probably a good time to ask you gentlemen the kind of the most popular question right now is, no one likes to be the first one to collaborate. How do you convince organizations to start working together when there's no data in the network? And I think you could probably just end that question with, how do you convince your organization to start working on, say, what Ian's trying to put together, or any consortium, or just picking up the phone and talking to peers?
I'll go back. I think fraud practitioners have been wanting to share, and you look back, early in my career, we were all on, email distributions and, negative bennies and negative accounts just being shared via email. I think where the hang-up is the headache that it's going to take to get legal compliance teams on board to share outside the 4 walls. And I go back to, looking at, leveraging 314B and other things to force the information to happen, but we have to do it in a way that's scalable.
Yeah, and I think, building your strong business cases and using, the past as a predictor of the future, knowing kind of how those areas could have benefited you. So when you do see, deconstructions of your losses, breaking down root cause, looking at it going all the way back, not just, it was an operational error, we're missing a technology here, but go as far back as you can. If we had this information here, we probably could have queued up an alert for this. We could have blocked them from opening up an account. We could have, put them on, segment with minimal, money movement and stopped this from happening. So business cases, depending on how your organization is structured, are typically key.
I would echo that 2,000%. I think the business case is at the core of being able to pitch this. It's, at the end of the day, how much money can you or your clients save? The other opportunity, I think, is commercialization. We're moving into an environment or to develop like organic growth. Like, what are new businesses that you can stand up? And we think about this as we launch networks and two-sided marketplaces. But to get that initial traction is, how can you make this a business? And specifically, account validation is something that's popping up across the world as a big need, and can also address fraud. So building a network around account validation can sort of be triggered and initiated if there's a business model behind it.
A quick follow-up question for you guys. Interesting. What consortiums are open to fintechs? Any that you can recommend? I don't actually have an answer to that. Does anybody know of any of the consortiums that have opened their arms yet?
Link by JP Morgan.
Dude, that just cost you a beer. I didn't even know I was teeing it up that well. Kind of an interesting thing. What should networks do to help? I mean, by definition, they should be at the heart of collaboration, right? What are the gaps? What should they do better, new, different?
Well, they're obviously on both sides of the transaction. So, I was at Nacha a couple of weeks ago as well, and they're doing a whole initiative on sharing the information of related to the ACHs, and I feel like they should be passing more data along with the transaction to allow technologies to pick up on those markers to thwart the mule activity ahead of time.
Yeah, I agree, and I'd say probably helping those who probably might need the help understand how they could do it a little bit better. What I've found in working with some of the networks and some of the partners, that the data is there, but when we started to build it up, it wasn't really established that we knew that it was there. So pointing to ways that we could be better through what they see, finding ways to leverage what they have, and also making it more readily available. I know that a lot of the ones that we work with are kind of on a batch process, so that's not very helpful in a lot in the real-time space. So I'd say just getting involved with those FIs, putting your heads together, taking that collaboration approach, and figuring out how to solve these problems a little bit more, a little bit more wholesale.
Hey, Jeff, and this might be a little bit of recap of what you were talking to the group a moment ago about, but the question came in around what are the most important tasks that AML and fraud ops can collaborate on? Thoughts on kind of your top three?
I mean, I don't know what we're talking about for tasks, but I think the collaboration effort in there is the data sharing and also kind of the data analytics, and modeling around it. Using advanced solutions in the middle to bring that data together to find something you probably didn't know before. One side should be feeding the other and vice versa, but you need a middle layer to do that. And what you'll find is your basic fraud operations functions, your basic FIU, are not going to be technically savvy to do that because they've got a day job of running the operations and doing your alert screening, your due diligence, and transaction monitoring. So what you need is that dedicated technical team that can kind of facilitate the middle ground.
I think also, right, getting operations teams armed with information so that they can have a fruitful conversation with the customer that's on the phone. So, we're seeing a big shift with our clients moving from, just oh, you're going to be tasked with check fraud, or you're going to be tasked with debit card. No, we're going to create specialized teams to look at money mules. We're going to create specialized teams to look at scams. We're going to look at it from an account takeover. So moving away from just transaction monitoring and transaction reviews to more of a typology review. That way they're armed with more information, better data. And then also from an alerting perspective, it's no longer a black box of, oh, it alerted, it scored 900. There's information behind that score so that the analyst can have a good understanding of why it alerted and have that conversation with the client to say, hey, unfortunately, you might be a victim of fraud.
Cecile, quick follow-up for you. Is Link by JP Morgan invite only? Nothing shows up online?
It is something that you have to formally join the network, so I'm happy to chat with whoever submitted that question and point you to the website. It is online.
All right. Next question. Are bot-created deposit accounts being held in reserve for future use, or is money more widely dispersed across them to avoid detection? What are you guys seeing?
I'm seeing a little bit of both. I think there's two different flavors to the velocity-based bot attacks. One is for quick utilization, leverage them as fast as you can, because what we are seeing is when they're set up, they're immediately establishing credentials, changing all of the non-monetaries in there, and then setting up some funding payments. I think the other part of it is playing the long game, saturate and inundate the FI with a ton of accounts, see what they clean up, and what they don't get, sit on it, do some maintenance on it, make sure that it's not, sore thumb, it's not going to be cheated out of your bank, and sit on that for a while until you need it.
I think if you look at what happened through the pandemic, right, and all that stimulus money that flowed through the banks, those accounts were out there sleeping, and it was a perfect storm, and they woke up, and so I also have to argue that it's a continuation, and they're just taking the right time to monetize.
All right, we have time for one more question. Let's go with, we'll go with this one. It may take me half the time to read this one. Do you think homomorphic encryption is a way to enable a more collaborative approach to fraud and mule prevention via federated machine learning? There's a
Jeff
throw in AI and we got bingo.
Yeah. I know. Yes.
Great question.
All right, we are going to lead by example and finish on time. Plus, we're the end of the day, and cocktails wait for everyone. Gentlemen, thank you. Thank you for handling the curveballs extremely well, and thanks for being willing to participate. So, folks, have at them. They're all yours now.
Thanks, Donna.